Hello, it's Robert Miner with Dynamic Traders Group with today's DT Daily 5 Minute Update and Trade Strategy, where we take a look at one or two markets that might have a good trade setup in the coming week. If you like what you hear, check us out at dynamictraders.com, our regular DT reports, and also at Twitter and YouTube addresses that we have here. And of course, check out my book, High Probability Trading Strategies, which will be a great education for you. Okay, let's get started and see what kind of trade we can come up with for this coming week. We're going to take a quick look at the euro and the dollar. And it's almost time to start locking in some profits here on our euro, where we made this corrective wave 4 low early in the week as we anticipated. We came right down into the high probability retracement zone for a wave 4. That's in the 38 to 50% retracement zone. And I've shown in the past how frequently the euro makes reversals within a day or two of a Fed announcement. So no different this past week is that we did make the recent low, at least right one day before the announcement, and we should have several days to 2 to 3 weeks advance following that Fed announcement. Happened to be two key daily time factors also on the exact day of the low. So we've continued to advance. We anticipate this was a corrective low, which means we should, before this, what do we call a daily trend? That's a trend that lasts several days before it's complete. We should exceed the October 18th high. And if this is a wave 4, we should reach, usually we'd reach at least the 127% external retracement of wave 4. In this case, one spot 12129. So we probably got another 2 or 3 days on the upside to go. Our DT oscillator, the daily 8, has reached overbought on Friday. So that also indicates within 2 or 3 days we should complete a daily high, which in this case may coincide with a weekly high to complete this 5-wave advance. So it's been a really low risk, high probability trade on the long side, but we got a little ways to go more than likely for another 2 to 3 days. And certainly if we start approaching this 127% external retracement, then we want to bring our stops, trail them daily really close to the market at some intraday swing lows. So that's what we're looking at in the euro. And of course, well, before I go to the dollar, let's take a look at the euro weekly. And this is a pretty clean chart. I don't have much on it. And I did a special report for subscribers a couple of weeks ago. It's about a 20-minute video and a written summary on the euro and the dollar. Is that more than likely we've turned the corner here and made a multi-month low in the euro. We've had some initial signals that that's complete. The weekly momentums have reached overbought. We actually made a bear reversal by a fraction on Friday. That doesn't necessarily mean it's an immediate price top, but it's also a warning, just like the daily reaching overbought, that we're pretty near a weekly top. But that weekly top should just be followed by 2 to 3 weeks of sideways to down in a corrective decline, because more than likely the early October low is a multi-month low. In fact, it may be a low that holds for a year or more in the euro. Of course, that would mean a year or more a top in the dollar. And that'll have, significant ramifications for other markets that are pretty much tied to the trends of the euro or the trends of the dollar. So pretty significant. So when we make the next high, we finish that 5-wave advance on the daily chart, more than likely that's going to coincide with a weekly. So we got a few more days to go, probably on the upside, but just be prepared that time is running out and the pattern is about to complete in the euro. Of course, the dollar, just the opposite. Here's what we're looking at in the dollar, and I got this chart real clean also, but 1, 2, 3, 4, and we made this outside bear reversal day on Wednesday, right into that we'd already reached the 38 to 50% retracement zone. By the way, that's the only time, about the only time a 38% retracement is relevant, is when it's for a wave 4 correction. And of course, the dollar should be sideways to down for another 2 to 3 days, should reach at least the 62% retracement. Everyone's going to be looking at that, and down to as low as the 162% external retracement of the wave 4. And again, because this is a 5-wave decline, in Elliott wave terms, it gives us a strong indication that the higher time frame trend is bearish. And so any rally that we get would be a correction within a much higher time frame bear trend. So we'll have lots of opportunities to participate in a bear trend in the dollar, bull trend in the euro in the weeks and months ahead. Well, that's it for today. Have a fantastic weekend, a fantastic next week, and check out our DT reports at dynamictraders.com.